Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, April 1st, 2019. In this video, we'll do a very brief overview of the broad markets because not a whole lot's changed so far since last week, or really for the last 6 weeks. We are getting some upside movement today, so there's some levels we'll keep an eye on. Then I'll roll into just some of the things I'm watching. This will be an add-on to this morning's charts I'm watching post on the front page. I'll cover a few more things that are moving and maybe touch on some of those commodities and gold and things that I touched on there as well. All right. First and foremost, this is week 6. 1, 2, 3, 4, 5. This is the sixth candle. Now we are above that resistance line, but remember, I've been focused on a weekly chart, and we've been well above and below that level before. So while today, if you want to play that game, who wins today, who wins tomorrow, today definitely goes to the bulls, and this is something to watch because now we're testing that high from last week, the week before, Thursday's high after the FOMC meeting. And that's a level I said I'm watching. So as you can see, we've been testing that level since back here, this weekly candle, but we've been as far as this low and as high as this. So we're really, again, I guess what I'm trying to say is caution on trying to interpret too much on any one day price action, because if nothing else, this market has been whippy and has yet to close, print a solid close, solid weekly close, I should say, above that 282-ish level. So there it is. And again, like I said, there's certainly today we're seeing this PPO signal line start to move up. But again, it's a weekly chart, so all that really matters is how we close the week. And if we can print a solid green candle above this week, bullish. And if not, if we come down and print a solid red candle, we really need to undercut the bottom of the trading range. But again, I've been focusing on these more micro levels, if you will, that 277.53-ish level on the downside, and 285.18 is the high back from Thursday before last after the FOMC pop. You can see we're essentially at that level now. 5 cents on a $285 share price is statistically insignificant. It's a basic test of that level. So that's what I'm watching on SPY. Let's not spend too much time on it because oh, there goes price alert here. Hold on one second. Okay, as I'm doing the video, I had a price alert on Tandem. It's actually the second alert I got today, so I'm glad that went off as I'm doing the video, so I can highlight this one. I mentioned this is a trade setup last week. This is a stock that was very bullish and long on back here off the lows, had these targets here, and it well exceeded those, had a couple unofficial short pullback targets here. And the bigger picture now, I know there's a lot of lines because again, I've been watching and trading this one down since it was around $2. But the important levels to watch are this uptrend line. That's a pretty powerful uptrend line. Not a lot of reaction since the lows, but then it does come in and has a lot of reactions here recently. It has a lot of reactions there. Rising wedge as well, big divergences building, just like we had big divergences at the lows that were the catalysts for this. I don't know how many 100% rally. Stock went up thousands actually, 3,400%, and that's it. So there's the alert. We're breaking the trend line. Last stand support is about 60.15. That is the top of the gap right here. There's a big gap from February 27th. This is an aggressive stock, an aggressive trade. I mentioned that I passed this along either in the trading room or on the front page recently as an unofficial trade idea. But there's the alert, and it's starting to crack below there. So at minimum, I expect a gap backfill. Yeah, okay. I guess I did list targets. T1 would be the 52.24-ish area, the top of the gap. Remember, unofficial trades, I usually do what I call unadjusted price targets. That means I have the actual support levels that I think will be hit on my chart. Now, I always set the on a short trade, the buy to cover limit orders that I'll use or use for the official trades are set just above the actual resistance level or support level that I expect a reversal. So in other words, on a long trade, you can see back here, for example, 447 was the first target back then, and that line is at 453. So I set it 5 cents below. Why? Well, just in case the buyers step in or the sellers step in and start to take profits early. And that line there was at 550, so I had my second target of 542. And so just want to make mention there, when you see the unofficial trades, they're usually unadjusted targets. So if I'm looking at a gap backfill to come down to about 52.24, I'll probably cover that at about 52.28 or so. Okay, so that's tandem. Again, a lot of potential, and I can just tell you right now, although I mentioned T3 as a final swing target, it is right now my preferred target on this one. 30.35, that level there, a little adjustment, maybe cover 30.45 or so, a little bit above that. But that's a very nice support shelf and a very likely target, I think, based on the scope of this pattern. So one to keep an eye on. And the other one, I had an alert today. Somebody brought up IIPR the other day, asked my thoughts on it, and I said this. I said, the marijuana stocks are looking very toppy. I've put up a few charts on those recently. This is a REIT within that sector, and I've been tracking this one. Here's another one that back here, I've mentioned this as a long side breakout all the way back when it broke one of these lines. We had a trading range back here. And on that one, I said, that had a lot of promise. It was a multi-year basing pattern. It goes to the left of the chart there. And on the breakout, I said, just trail a stop up. And I mentioned it at the time. It was right here. It just flagged. So I said at that point, it had broken out. Set a stop below that flagging type pattern, that reaction low, and that stop would have never been hit. This one would have been, that was a big gainer from there. Of course, not that I was lucky enough to have put my money in that and held on to that for that long. If I traded it, I just can't remember when. I trade so many stocks, but that was a 312% rally from there. So like TNDM, it's come full circle now. You have divergent high. I made a case on the REITs, which I'll get to in a second, that the two sectors that stood out to me right now as the most bearish on last week's video that I did covering the 11 sectors in the S&P were REITs, which this one is part of, and utilities, and those also happen to be 2 of the 3 sectors down today in the S&P 500. So this one cracked 80. That was horizontal price support, but it's right on the trend line now. So we need to watch that trend line. We don't have a lot of reactions on it so far, so maybe a bounce there, but a solid break below that trend line and close should bring us down to at least this 67-ish level, and quite possibly down here at about that 52.25, we'll call it. That's not a super well-defined level, but that's about where I'd have my target, a little bit above that. So those are two trade ideas with some potential today. Okay, back to the broad markets. As I said, the fact that SPY is trading above the 282-ish level, again, by a pretty good margin, you have to give it the benefit of the doubt right now. So as I mentioned this morning, this one, in the trading room, I posted IWM as a pullback trade. I was able to get a quick trade back. It was like a I think 0.6 on RTY, the future, 0.6% profit or whatever. Small gain, but that puts a few $100 in your pocket, because what we had is what you usually get is the initial tag of a trend line when it hasn't been visited in a while, often produces a reaction. This was the initial tag, the first tag, at least since this point in time right here. This is the downtrend line I was talking about here, posted that. So earlier today we hit that trend line and we pulled back to, actually was my first support level below at 154.06, and so far that's held. Now here's what you want to watch. If the market fails to hold today's gains, and remember guys, that's what this market has been all about, the S&P 500, the NASDAQ, the small caps having these pretty decent size intraday gains or losses, only to see it reverse. So I'm putting very little stock into what the indexes do intra-week, as I have been for a while. There's certainly some quick swing trading ops. So on IWM, what you want to keep an eye out for is a failure here, which will most likely happen if the SPY fails at resistance, the resistance level I showed you that we're trading at now. Failure here, and then a breakdown below this trend line that could bring IWM back in. And let's see what happens before I even go through the effort of laying out targets. But let me move this line up right here, or add another line for you. Let me just see where this one could go if there's a failure here, down to about 148.52. So And taking that, like I said, there were three options today. If you're bullish and you think the breakout in the broad markets will stick, you can go long on a breakout, a break. It should be impulsive. Better if you can get a 60-minute close above it. However, I also mentioned you had resistance at 155.90 just above, so you may want to wait for a breakout of that level. Likewise, I said you could short it here at the downtrend line with a stop either somewhat above that downtrend line or above the 155.90, and which one you do really depends on how much are you shooting for. If you're only shooting for a quick pullback trade like I was, you keep stops very small. If you're going to hold out, which I may jump back into this one if I see failure or rejection in the broad markets today, but right now with QQQ and SPY up, no, I'm not looking for anything more than what we just had. But again, if they roll over, small caps could fail here, and again that could open the door for a move all the way back down here to 148.50 or so. But as of now, that's just levels to watch. And again, bullish if that gets taken out, especially on a daily closing basis. Bullish if that 150, we'll call it 156 because there's a few pops above it there. So we'll call that about 156 that IWM needs to take out. And then these divergences I mentioned, I highlighted these last week, divergent low on the 60-minute chart. They will play out for the measured target if so. Otherwise, that's probably all the move we're going to get. And let's get off the broad markets. Let's look at a few sectors now that I mentioned that. Okay, so in last week's sector analysis video, I covered the REITs, highlighted those as one of the more bearish looking sectors out there, and said that there's not a very well-defined uptrend line, so we need to look for some type of bearish reversal. And so far we're seeing, we had a doji candle, you can see that on Friday, followed by a red candle today. So this could be, they're certainly looking toppy. And there's your divergence, negative divergence, everything I like to see. And again, my minimum target right here is move back to that 83.11 area. SRS is the 2-time leverage short ETF for the REITs. You can also do DRN, which is and DRV. Those are the 3-time bullish and bearish ones. So SRS, there's another 4% or so downside in IYR from here if that target's hit. So that'd be about an 8% gain. Not bad for a swing trade. And my expectation is at least a reaction there. So you short the REITs here. You can also use IYR, and remember, if I point out the 2-time inverse ETFs for those of you that either don't have two things. Maybe gives you a little extra buying power. You're not using much cash, but you can also, if you have a margin account, you can just short twice as much IYR, and then you're effectively doing the same thing. Because remember, SRS is leverage. That leverage cuts both ways, both on your, doubling your profits, and then also on your losses as well, doubling those. So you take SRS long, then you really take half a position size that you might normally trade in IYR. And ditto for the 3-time leverage ones. You have to take that position size down even a little bit more. So that's IYR, and the other one I mentioned was the utilities. And that they continue to play out as such. You had a divergent high, you had an uptrend line right here, pretty well defined, very steep and dangerous, breakdown, kickback, back test, and we continue lower, but we are coming up on support. So not a lot of meat left on the bone unless that support level goes, which opens the door to the next target zone down here. SDP is the 2-time leverage one, and on that one you can take you can use the extra leverage and not have to adjust your position size down too much. Why? Because you're trading utility stocks. These are your steady Eddie dividend paying utility companies. They're not going to smoke you on a 5% up or down day. That is very unusual. There are periods every now and then you can see there once in a while and you get a big move, but that's very rare. For the most part, utilities are relatively tame compared to tech stocks and things like that. So that's the other one. Again, it continues, the bearish technicals on that continue to play out. And of all the ones out there, if I'm not mistaken, I said the industrials look the most bullish to me out of the sectors. We had this, especially on the weekly chart. I don't have this one marked up. I must use a different board. There we go. We had a divergent high there. We bounced off this support level. We were oversold right there. But on the daily chart, we had what we had here is the PPO curling up at the zero line. And again, that zero line does a good job of defining trends. When the PPO, that signal line's above the zero line, like it is, the trend is bullish. And the zero line often acts as support when tested from above. So that's what happened with XLI, and it's moving up pretty nice today. And that's also going to cause us probably to be, if it hasn't already, get taken out of the Boeing trade, because Boeing is one of the major industrial companies, and birds of a feather flock together. When you have a lot of buying into a sector, most components, especially the top components, are going to move along with it. So that's XLI. And I'm not going to do a full sector analysis on all 11 sectors, but XLF I wanted to point out. XLF did hold that support. Remember, it fell to 25.13. Very good price support. The former 38.2% Fibonacci retracement. You can see the fib levels here. After failing at the 27.13 price resistance plus 61.8 fib level with a divergent high to boot. So again, the divergences played out, and they played out for a very swift correction. Is it over? Probably not, because on a daily divergent high, rarely do you see just one wave down, one and done. Here's a divergent high, wave one down, a kickback rally, another wave, little kickback, then the next wave down. That's usually how a correction works itself out, especially divergence on the daily time frame. Nothing goes straight up or straight down forever. So the way I'm looking at this is this was a bounce off support. It was a very well-defined support level, very important support level right there, 25.13, and now it's bounced right back into resistance, a 50% fib. And again, that fib counts measures the move from the high to the low right here, back in the 2018 high to the 2018 low. And more importantly, you have some pretty decent resistance there, 26.29. So whether or not 26.29, or we'll call it 26.30, gets taken out will largely depend on the S&P 500. If it can break out, finally break out of this trading range, build on today's gains, then I don't think you're going to have a short trade, or it's going to be hard to have a short trade on the financials. Otherwise, this may offer, and I can tell you it's aggressive. Why? Because I said if you have to give it to anyone today, you have to give it to the bulls, as long as they keep the SPY up around this level right now, even though we haven't clearly broken out of that range. But so what'll happen is, if it fails, because resistance is resistance until unless taken out, so we're still there. So you could take a short here. You probably run an above average risk of being stopped out, but the RR is pretty nice, the risk reward. So you short around 26. Look, we're at 26.25 right now, just shy of the resistance. And you short for another, let's say another test of 25.13. That would be a drop of about 4.5%, and you could have a pretty tight stop above there, about 0.5% or so, and that would give you a very good above average risk reward ratio, which more than makes up for it. Now, if you're not into taking pot shots, sit back, let this market pick a direction, because swing trading can be very difficult when the broad market is in a nearly 2-month sideways trading range. But that's that. So those are levels to watch on the financials. And again, based on the scope of the divergences, everything else, I favor at least another leg down here, possibly more, especially if SPY fails here and ends up closing the week down, red candle and back below the 282-ish level. I suspect we're going to make a definitive resolution of that level, by the way, I think this week. Just a hunch. But we're already, what I say, 6 weeks into doing this, testing this level. So maybe we we close above last Thursday before last, that reaction high. That would be a definitive resolution, a big green candle well above that level. A downside break would be quite a move from here, especially to take out these lows from a few weeks ago, especially all the way down to the bottom of that candle. You'd need about a 4.5% drop from where we're at to undercut the lows from the week ending Friday, March 8th. But these are, again, things I'm watching, and I keep jumping back to this because how this plays out will largely impact how the financials will play out, and the tech stocks and everything else, because they are the top components of the S&P 500, largest sector. Okay, now into something a little bit different. I used to cover Bitcoin more extensively when it was, moving and trading, and every now and then it sets up in a pattern. So I've pointed out two trading ops, and two breakouts or levels to watch before they even happen this year. Right here, I posted Bitcoin just before it broke above this bullish falling wedge pattern, and then it exploded up. I had targets here, and that was the first resistance and target there. Popped past that, and then most recently I posted it right here, saying this was a very well-defined level as well, with a target right here, 4203.60. So we did break out of that level. We broke out, came undercut it a little, but now we're getting close to that 4203.60. Here, I even have those charts here somewhere. Maybe this one. Yeah, there it is. So there was the move back there earlier in the year, that bullish falling wedge. That was the first one that was posted on February 8th. And we broke out and ripped up. And then the next update was back on March 19th, and showing you if this level broke out here, 39.76. That would take us up to 4203.60. And so again, the chart I just showed you is up to date, and that's we're coming up on that level now. So the takeaway is not a lot of meat left on the bone for this one before reaction. It's not a, let me say this too, this is not a very solid level. We could pop above it. We only have the reaction here, and we do have a big gap here. And if we get much above it, and I don't think it'll happen right away, so it might need a little more consolidation, but this has just been a big consolidation period for Bitcoin. What I'm getting at is it's probably a good idea to take profits, or at least raise stops, protect your profits at that point, set your stops somewhere there, and maybe let this one work off the near-term overbought conditions. And one of two things, we'll either get a breakout here, or maybe a nice short entry here and try to swing it back down to the bottom of the zone. I'll have to study this chart further. I haven't done that yet to really see, which way I lean. But I just want to say we are coming up on that target area, and I wouldn't try to squeeze every penny out of 4302.60. A little shy of 4200 is a round number. Probably a good place to take profit if you're in this one. And again, if I didn't make mention, that's GXBT. Those are the futures for Bitcoin. That's my preferred trading proxy on Bitcoin. You can also trade GXBT, I think it is, or no, GBTC. That's a closed-end fund that trades like a stock or an ETF. That's another way to go trade Bitcoin. JO, it's a shame. I really, this coffee seems to be setting up with the bullish falling wedge pattern. This is a daily chart. But the futures, KC, they stopped trading. I think it's 1:30 p.m. Eastern time. So JO, the official trade, I'm not going to revise this stop, even though this technically trades till 4 p.m. It usually goes nowhere after 1:30 because the futures stop trading actively at that point. So they'll probably take us out. And if it does, no big deal. We'll watch this one. Want to see this downtrend line get taken out. There's still, look, you can see these divergences just continue to build. So there's a move coming. There is a trend reversal coming in coffee, but right now it continues to just bleed out, and we don't have that catalyst, that spark that we need. Looked like we might have had it back here, but it didn't follow through. So I just want to make mention. I will keep this one on the radar. If you want to, extend your stocks, your stop losses on that. Depends where you bought it. Maybe you're going in now. At this point, no reason to go in until you get a buy signal, some type of reversal, some type of maybe bullish candlestick reversal pattern, or a break above that 60-minute downtrend I just showed you, or even this daily downtrend line. And I'll have to get the coffee futures too. I like to look at KC and confirm what I'm seeing on the ETF or ETN chart. With the actual futures that it's tracking. And the other ones, we still have, we also have a active long on wheat. That one's profitable. Let's see, that one's based off the 60-minute chart, largely based off wheat futures. Those are ZW, the symbol for wheat futures. I put those charts up with the trade. So we had this nice downtrend line. This is, so far, it's playing out well. Breakout back test right there. That's what you want to see. So there was your buy signal, and there was a second objective long op, and since then it was setting up and walking its way up pretty well, pretty steadily, I should say, within this price channel here. And nothing goes up forever. We got very overbought. You can see we're overbought here on the 60-minute time frame. That's not long-term overbought. It's not on the daily or weekly. Remember, we're just coming off oversold levels on the daily and weekly charts, and we had this big divergent low here. So what this is kind of near-term stuff. This kind of gives you an indication how a trade might play out. And so nothing goes up forever. I view this recent pullback as healthy because it helps to work off the overbought conditions and then gives you the fuel you need for the next leg up. So we're back to that R1. R1 was resistance that I had here about 540. We broke below it. We're testing it again. We were testing it back here. We were testing it here. So we need to pop above 540 and then of course take out that previous reaction high, and that should open the door for the any of these targets. I still favor at least to move up the T2 as long as these charts remain constructive. And another one we had was, what was it? BAL. BAL I put up as an official trade setup, watching it. Got distracted on the entry. We had to break out there. I didn't want to chase. I wanted to wait for an objective long entry. Missed that too, posting it on the front page before it happened or when it happened. R1, that was in a very objective add-on or another long entry there. So we hit my first target to the penny, I think it was 46.96. And again, there's an example. See, sometimes I'll leave these levels up. 47.05 was the actual resistance level right there, and you can see the day of we hit high 46.96. You see my pop-up box to the left in the upper left-hand corner. 1, 2, 3, third row down, high 46.96. There's an example why I don't hold out for 47.05, because a lot of times these things will reverse just shy of resistance. So that one was hit to the penny, pulled back. R1 support or resistance once broken becomes support. That's TA 101, technical analysis 101. So R1 is really S1 at that point, and then we did support. We held support, bounced again. So what's happening? Well, we're testing that 47-ish level again, solid pop, and that should take us up to the T2, the final target. So with these commodities, just like asset allocation, just like trading stocks and sectors, you have to spread it out. Coffee's not panning out so far. Wheat and BAL, they are. Okay, and finally we'll wrap up here with gold. Really, you want to know where gold's going, you just have to figure out where the dollar's going. This is my preferred trading proxy, the euro-US dollar pair. It's like looking at the dollar in reverse. So starting out here with a weekly chart, this is what I've been tracking. And this would have also, we're going to get to the daily in a second, it would have filtered out that whipsaw signal on the daily. So we had a breakout on the daily, but not on the weekly. And this is why I talk about, when you have a pattern on a weekly, all that matters are the weekly candlestick closes. So what you have here is a very, important resistance zone. It was the resistance back here in this basing pattern. We're a little bit below that now, and we also have this bullish falling wedge complete with divergences, but we don't have any buy signals yet. The PPO is still pointed lower, so the dollar or the euro dollar pair is on watch for a breakout. If and when that does break out, that should be bearish for the dollar, which is bullish for gold. So that's how it looks on the weekly chart. Here's how it looks on the daily chart. A little bit busy here, but let me just draw the important lines. Here's the wedge. I have it drawn with this trend line as well as a trend line off the highs. That's the yellow trend line. Either way, they both had this brief, this was Fed induced, and that's another thing there, is that I talk about how you often have whipsaw signals immediately in the wake of an FOMC meeting. So therefore that caused that very brief break above the daily chart here, and one day close above it and failed back below the next day. But again, on the weekly chart we never cleared it. However, this this looks, the daily chart also shows us the same thing. We continue to drift slightly lower in this wedging type pattern with bullish divergences. We just need that catalyst. We need a breakout, and breakout ideally should be impulsive. You want to see a daily close here, go out to the weekly chart, you get a weekly close even better, and then that will be our next entry on gold. I've been waiting patiently. I mentioned it as scale in between 122.40 to 119.97 after this divergent high we had here in the breakdown. We had a sell signal on gold back here. And you can continue to scale in if you're a long-term investor, but if we want to get the timing right, which I'm holding off on the next swing trade, it would be, here's a bigger pattern. This is a weekly chart. This goes back to 2011. This was your last bull market in gold, ended in 2011. That blow off top, and there's a big downtrend line. An important downtrend line forms this symmetrical triangle pattern with this lower, this uptrend line here. And so most recently, you had a breakout and a back test, and we're coming to back test it again. Trend indicators bullish as of now, although turning down. So gold needs a little work, and again, so I'll watch the dollar and euro closely, and if and when we can get that breakout soon, ideally you want to see this back test hold. It's not absolutely necessary. There are support levels below, but if that does happen, then my expectation is for a move up to that 130-ish target, we'll call it. Probably a little pullback there, a little more consolidation, and then that would be very powerful to see 130 get taken out. I think that would be the fuel for the catalyst for a rally up here to at least 151.18. That is a very big basing pattern there in gold. So if that gets broken out, that's a long-term buy signal, and that would be just probably the first stop as far as the major trend goes at 151-ish, and maybe a pullback there, maybe some consolidation, and probably more upside from there. Oh, a few more, guys. I meant to fit these in the beginning of the video, and I got that price alert went off earlier on TNDM, and I skipped over. Wanted to cover a few other things that stand out. I mentioned lithium stocks not too long ago, a few weeks back, I believe it was. And here's one, American Lithium Corp, LAC. Big, nice clean downtrend line, breakout, and a thrust up, and it's starting to move again. So, like I said, nothing goes straight up. Since the breakout, we had the initial thrust up, a correction to work off these overbought conditions, which you need to clear the way, and it's up impulsively today. My first target here comes in around 477. If it can power on through there, I think it can work its way up here at about 570. So that would be, if that's hit, about almost 12%, and then about 32% upside. And then the other thing that stands out to me, I've been watching recently, are a bunch of these auto part makers. ADNT is one of them. You can see just a nice clean divergent low. PPO is starting to turn up now and cross over. That's confirming the divergence right here. I could probably draw a downtrend line. I don't want to force one here, but let me give you one, because that would probably be a price target or a level to take some profits, and it's way up there. So I'm going to add up some targets right here for you, some resistance levels to watch. This one's up nice today. It's already up over 10%, but it's gotten the snot knocked out of it. It went down from almost $100 all the way down to 12 or so. So it's got plenty of room to run, and I'm seeing movement in the sector. Some of these charts look pretty good right now. So there's some potential targets, and keep in mind that downtrend line is likely to come into play as well. That's ADNT. A couple more in the sector that I have marked up. BWA, maybe an inverse head and shoulders pattern here. I'd have to mark it up for you real quick. I don't have it marked up, but you can see here. Let me just grab this drawing tool. Left shoulder, head, right shoulder, and this is your neckline. So the way to trade a head and shoulders, if we continue to see an impulsive move up, and then impulsive is better. If you see that, you want to see the right shoulder formed on increasing volume, and then your buy signal will come. You can trade it up to the shoulder and maybe hold it, keep a stop in place, and go for the whole kahuna here, which would be a breakout and to take the measured target of a head and shoulders pattern. I'm sorry, I should say inverse head and shoulders. That's an IHS. Inverse head and shoulders bottoming pattern. You can look those up. The measured target is the distance of the head to the neckline. So that would be a big one if that played out. That's BWA. And let's see, ADNT I just showed you. CPS is another one. Same story. Big old divergent low. PPO is making a bullish crossover now. That in itself usually tends to bring in buyers when you have a bullish PPO crossover. And this one does have a pretty nice downtrend line to look at. So this one can run here. It's starting to crack, so keep an eye on it. If it continues to needs a little more work to get above that level. It might be cracking above it now. Volume looks good so far today. We can look at a 1-minute chart, see what they're doing. It's a thinly traded stock. Keep that in mind as well. Targets, which I'm sure you want. I'll have to study this chart a little further, but I can tell you right now, I don't see a whole lot stopping this one if it can break out up to about $58. So that'd be a pretty nice move, about 18-19% rally if that plays out, and that's CPS. And I think I have a couple more. TOWR, Tower International, big divergent low. PPO is also curling up right now, poised to make a bullish crossover. There's your divergent low. It's a choppy little sucker. You can see this thing tends to trade very sharply in either direction. So if we can catch the right trade, the moves are usually pretty swift in either direction. It doesn't lay idle for very long. Sometimes you get these trading ranges here, but this one tends to move. So there's one to point out coming off that divergent low. Target, I'm going to have to zero these in. This one I'll have to work a little harder on. This, the targets don't jump out at me right away. But you can get in there if you like it and trail a stop and just let it run, especially if the S&P 500 breaks out. Get a failed breakout in the S&P 500 here, or a downside break this week. That's going to foil a lot of these long setups, or could. It should give them a headwind. WPRT, this one already broke out, bullish falling wedge. Here's your divergences, divergent low there, went on breakout, back test, moving up. First target 183, it's a low price stock. If it breaks above there, it could continue to run. SUP, Superior Industries International, another auto parts stock. There's your divergence low, strong divergence, big positive divergence coming off. And again, the story of these stocks is they've had the snot beat out of them. So they're value plays, and also potential bottoming plays. Even if they're in a bear market and it's a bear market rally, don't underestimate how far and how quick stocks like this can run. If it runs up there, I would say you do have a reaction here that may come into play about $5.90, but I think it could probably run up to $7 based on this pattern, again, if the market holds up. And that's about another 32-33% from where it is right now, and it's already moved up pretty sharply. All right, so I'm going to wrap it up here and try to get these out to you. And if I see anything else, I'll post it on the front page or within the trading room. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.